Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. Crypto markets are bracing for a significant regulatory crackdown as Binance moves to enforce compliance with the European Union's 21st sanctions package. Effective August 23, the world's largest exchange will block access to HTX and 10 other platforms listed under these restrictive measures. This move highlights the intensifying pressure on digital asset providers to navigate complex geopolitical landscapes. For traders, the immediate risk involves address rotation and liquidity fragmentation. As Binance severs ties, capital flows may shift toward decentralized exchanges, creating short-term volatility. The compliance risk is no longer theoretical, it is an operational reality that demands immediate portfolio rebalancing. Meanwhile, traditional consumer markets are undergoing a subtle but profound shift driven by demographic changes. Gen Z's snacking habits are actively disrupting established industry norms. This generation favors sour and briny flavors over traditional sweet profiles, forcing major food conglomerates to rethink their product development pipelines. Investors are now looking at snack sector stocks not just for stability, but for growth potential tied to these changing taste preferences. The disruption is real, and the investment opportunities are emerging in companies that can pivot quickly to meet this new demand. On the macro front, economic data from Eastern Europe signals stagnation. Romania's flash GDP estimates for the second quarter show a contraction of 0.4% year-over-year. This decline marks a concerning trend for what was previously Eastern Europe's fastest-growing EU member. The slowdown reflects broader headwinds affecting the Eurozone, suggesting that regional growth models are under stress. Investors should monitor this data closely as it may influence European Central Bank policy expectations and regional currency valuations. In the crypto institutional space, UBS's latest 13F filing reveals a stark contrast between speculative leverage and actual conviction. The bank reported a massive 2,338% surge in IBIT call options, indicating aggressive bullish betting on Bitcoin's upside. However, their actual spot holdings grew by a modest 11.94%. This leverage versus conviction gap suggests that while UBS sees potential upside, they are hedging their exposure heavily. Traders should interpret this as a cautious optimism rather than a full throttle buy signal. Finally, the Solana network is addressing its scalability issues through the SIMD 0553 proposal. This overhaul ties transaction fees directly to compute usage, effectively penalizing inefficient arbitrage bots. By increasing burn rates for resource-heavy operations, the network aims to lower costs for simple transfers. This technical adjustment could improve network efficiency and reduce congestion, potentially boosting developer activity and user adoption in the coming quarters. That's your market briefing. Follow Rumour with AI for daily market intelligence.